speaking of spikes, on the downward side, we've spoken about some stocks that are doing well in the cash segment. On the downward side, however, Aegis Vopak is low by 2% in cash. You've got Acme Solar seeing a cut of 1%. Bharat Forge continues to reel under pressure, as is the case with the Zydus Wellness. Jindal Saw also now joining that list with a cut of 1%. Kunal, any of these names, how are they shaping up on the charts? Any view on something like an Acme Solar, perhaps? We've not spoken about that stock in some time now.
Yeah, I think, actually what has happened is many of the solar stocks, the last I had seen, I think I've gone through a decent correction or a time-wise pause in the last 2-3 months or so. I was looking at Acme Solar, Vikram Solar, etc. I think these stocks have gone through a decent correction or a sideways range. It's just that I would sense it's a lack of participation, lack of interest into this sector at large, and that's why I would sense that these prices would probably come back into a further correction going forward. So I'm not too much concerned over the major price-wise correction, but I think it's a time-wise pause which could probably hit a short-term trader into investing into these names.
Okay, just taking a look at where some of these names are settling as the cash market closes. 3% uptick on Titan today, looking good. One of the top Nifty gainers on the back of good earnings. Shriram Finance also joining that list from the Nifty, a 2% uptick over there too. Right now, as of now for the Nifty, we're absolutely flat, continue to be there, but we've also slipped slightly further away from the 24,600 mark. 24,583 is where we're at. Sensex continues to be flat, as is the case with the Nifty Bank and the Nifty Small Cap Index. However, that 0.5% uptick on the Nifty Mid Cap, that continues to stay, so that looks good. From the broader end, it's actually quite even Steven, but in fact now the favor is tilted towards the decline slightly. PFC, Bharat Forge, REC, NLC India, Inox Wind, cuts of 6 to 8.5% on all of these names, and these are some names that are causing pressure to the Nifty 500. But on the flip side, stellar earnings from Hitachi, a good Bernstein note coming in on Paytm, that stock up 10%, Syrma SGS, Sumitomo Chemical, BEML, Schneider Electric, Pine Labs, Allied Blenders. All of these are some stocks that are doing well from the broader end, and that is actually how the cash market is coming to an end right now, with the Nifty at 24,583. Kunal, quick thoughts on the kind of trading session that we've seen today. We've been absolutely range bound and lots of action expected tomorrow. Amphi data, that Amphi numbers will also be out, and just a quick view on how the trading session has been.
See, it's almost like 5 days the markets have grinded into this 200-point band. We've been stuck over the last 5 days at 24,500 plus minus 100 points for the index, and it's getting a little bit more, I would say, tighter for the large cap stocks to show signs of any kind of a big breakout momentum. It's just that I think the real moves are actually happening across the underperforming sectors and the stocks which are beyond the Nifty 50 basket, and I think that's where a trader seems to be concentrating upon. Largely, the Bank Nifty, I think, has been having a flip-flop because we've been stuck around this 58,000 mark for the Bank Nifty. There are days where you see the PSU banking stocks outperform, like what happened the previous week, and then there are days where you see the PSU banking stocks underperform. So it's like a flip-flop action which is going on across the major sectors. But then broadly, I would sense that we're just going through a patch of consolidation. Hopefully, I think we don't extend it beyond to a certain point where the participation drops down from the index levels per se. The positive part when you look at the index parameters is that the put call ratio, which was almost at 1.6, 1.57 start of the previous week or mid of the previous week, that's cooled off quite significantly from those elevated levels. So that probably indicates that the markets are now into a balanced mode or an equilibrium zone.
And this equilibrium that you're talking about, Kunal, it seems to be slightly visible in the market because given that this is the 6th session where the cash has come into play, you've got the Nifty that between 315 and 330 has spiked by only 0.1%. So quite stable over there also, right?
Yeah. So I think that's what I was saying, that the markets are now adjusting towards this new reality. Hopefully, I think we see that effect playing very less from a closing perspective. And I think if that happens, I think the entire notion of introducing cash as a system, I think finally gets achieved.
I want to quickly also quiz you, Pashupati, with regard to how you're looking at realty. You clearly said premiumization is playing out and playing out very well for India. I wonder if realty as a pack, you expect that to continue to outperform because you've seen some very strong moves. Realty bottomed at maybe 650, 670 on the index. We're currently at 900.
Well, the reality, the reality of realty is that people are looking for triggers. As you said, premiumization is doing okay, but the the next level is still chugging along. There seems to be a lot of redevelopment happening, certainly in Bombay, and that's kind of what we're seeing. So because there's such a lot of redevelopment, it's going to take, the whole cycle to get the value into the realty companies. So according to me, it's a little premature to invest in them, but there will be a point at which, the property prices will start moving and then people will start buying into the realty companies. It's a good place to be. That's my personal feeling.
Pashupati, anything that's looking deep value at this point of time, or even short-term tactical opportunistic, if I can call it that, anything in any of the sectors that's looking in that kind of a breadth?
Actually, you just need to buy a Make in India company that is not dependent on any imports and that there's a domestic demand from. There are a few in there. You can buy any of those, sit on them, and just enjoy the run. I mean, even sectors like paints, sectors like groceries, some of them may be a little bit high priced, but I think they're the place that you want to invest in because they're going to continue to do well.
Pashupati, give us the formula.
The formula? I wish I have a printing machine in my house. That's what I need. Anyway.
Yeah.
Thanks, guys.
No. Thank you, Pashupati. Thank you. Okay, Kunal, let me come to you. With regard to realty in particular, any favorites within that pack?
Yeah, I think now the opportunity is quite ripe for the real estate stocks because many of the stocks like Godrej Properties, Oberoi, Prestige, etc. These stocks have gone through a decent 5% to 10-ish% correction in the last 1 month, broadly 3 weeks approximately for the real estate names. Generally we say that a 10% correction to the stocks and the ones which have been performing is a good opportunity because when these stocks come back and correct by 10%, coincide with their 50-day moving averages. Like for example, the case was for Oberoi Realty. I think the stock made a high of 1940 thereabouts, and now it's sub the 1800 levels, 1790, 1780 thereabouts. So that completes a decent 10-ish% correction for the stock. It also coincides with the 50-day moving average. So I think when you see such kind of an opportunity, the trade setup starts to balance back again into these names where the stocks could probably come back into a recovery mode. And if that happens, you're looking at a swing trade of maybe 5% to 10% very quickly into many of these stocks. So Oberoi Realty, Godrej Properties, DLF, they remain to be top bets even at current levels.
And Kunal, Mr. Advani was highlighting how the tilt should be towards domestic-facing sectors, given that there is so much happening geopolitically. How are you looking at manufacturing, and particularly manufacturing of heavy machinery, precision engineering? Any broad themes within manufacturing that look good to you right now?
So I think the power manufacturers or the power ancillaries are the ones which are looking very attractive. We were discussing this, that for example, a stock like G1 TND, I think that's another name which has been doing fairly well. That's a stock which has corrected more than 15% in the past, say 1 month, 1.5 odd month, broadly from the June-July highs. So many of the stocks in the similar category are looking attractive. The idea over here is that there is a theme which the markets evolve or go into, but then the timing of these, the entry of these stocks is going to be very, very crucial. You don't want to start looking at timing these stocks at a point when the breakout is actually happening, and then these stocks immediately post the breakout go into a phase of price correction or a cool off just because of the mean reversion which is pending into these names. So I would suggest that it's better to try and buy these stocks at a point when the stocks go into a correction phase. I think power manufacturers or the equipment manufacturers are the ones which I would sense should be a good trade at the current levels.
Okay, that's the take coming in on some of the manufacturing names as well as power-related names and power anchors. But shifting focus then, let's take a look at the FNO snapshot this hour, and Sajid is joining us on the show with that. Sajid.
Thanks, for that, the Nifty ending absolutely flat in today's trade. But what you see in the cash session is the open interest build-up of nearly 1% for the Nifty futures, and that Nifty futures is now trading at a premium of 76.3 to the spot, which is the 24,583, which is the settlement price at 330 there. Nifty Bank, again, we're seeing some shorts getting added there. The index ended up lower, but open interest up nearly 0.32%. And if you look at the constituents, you had public sector banks where we've seen in the where there's a lot of short position which is coming up in the constituents of Nifty Bank there. So that's one thing which you need to look at. As I said, SBI, Bank of India, Bank of Baroda, PNB, all seeing some kind of short position build up. There's a reversal that we saw in HDFC Bank. In the morning, we had some long position coming up, and now towards the end, as we go towards the end trade, there is a shorts which are getting built up for HDFC Bank in today's trade, with ICICI Bank and Axis looking at some long positions to close today. But the activity is in the call and put writing. We saw towards the second half a bit of put writing that came in, and as a result of which we tried moving towards 24,600, but we came off that. And if you look at the distribution chart, you'll see that 24,600 is holding on as of now, and with the good support coming at 24,500 for the Nifty. Among the gainers today, you have a lot of earnings-led companies, which are Hitachi, which is up nearly 11.3%. Paytm is up on the back of the Bernstein report, which upgraded the price to 2,200 rupees. MCX saw some long build-up happening, 4.35% up there. In the losers pack, you have Bharat Forge, where we have seen after the earnings that came in, little disappointing, some provisioning that also came in because of the losses which to one of the subsidiaries. The stock down nearly 7.62%. PFC is down 7.5%, and REC down 6.2% in today's trade there. But operators gainers include Amber, where the operators are nearly at 29%. Bharat Forge saw a late spike in open interest, with open interest jumping nearly 23%, and PFC is seeing open interest jump of nearly 19.7% in today's trade. In the losers pack, Keynes Tech, after the earnings which were disappointing, there's some long unwind that we saw. BSE is up on the back of short covering, anticipation of an possible inclusion to Nifty 50 that will come out towards the end of the day by the index committee, but that's where it is. But the Nifty, as I said, is absolutely flat at this point in time, and the Nifty futures at 24,660, trading at a 76 point premium to the spot.
Okay. All right. Thank you so much for that, Sajid. In fact, completely timed out on this edition of Closing Trades as we've closed in on the market. It's a thank you and a goodbye from all of us here in the studio. Kunal, thank you so much for joining us and giving us all of those views.